Yeah, we need to talk about that interview. You know, the Jeff Bezos one about recession. Hey, how's it going? Welcome back to my channel. This is Pradeep and you're watching Vlog of Note. In this video, we're going to talk about what you need to do before a recession, what stocks you should avoid, and what stocks you should consider. Let's get started. So first of all, usual disclaimer here, I'm not a SEBI registered investment advisor. There are only about 1,300 of them in India. I'm not even a certified financial planner. I'm just a person who has made a reasonable amount of money by investing in the stock market. So if you want to do any stock market investments, you should do your own market research. Now that we've got that out of the way, let's talk about that Jeff Bezos interview. Everyone has been quoting it to me left, right and center over the last couple of days. He basically did an interview with CNN with his partner Lawrence Sanchez, and he spoke about a lot of stuff. He spoke about recession, in which he said people should put off their purchase of TV and cars because the economy really does not look good right now. Also, by the way, he ended that interview saying that he might purchase a football team, so I guess different rules apply for him. But anyway, the important point here is that he spoke about a recession that could be coming. Now, in this video, we thought we'd talk about what you should do before a recession. But before we get into the video, I would really appreciate it if you could subscribe to the channel and give this video a thumbs up. It really helps me out. Now let's jump into the video. The first thing that you should do before recession is basically cash management. Now, Ray Dalio, a famous investor and billionaire, had basically previously said cash is trash. Now he's changed his mind and said cash is not trash. You need to have proper financial management. Basically, you need to have an emergency fund. Less than 27% of Indians actually have an emergency fund, and what's more, that emergency fund on average is 1.9 months. Compare that to China at 3.9 months, and we're kind of badly off. You should also pay down your various debt. Now, credit card debt is becoming a huge problem in India. The Flipkart Axis Bank credit card is something that a lot of my friends have, and that charges an annual whopping 49% interest. So yeah, you should definitely try to pay down your credit card debt if you can. The second thing that you should do before a recession is your mental fortitude. Now, Peter Lynch has basically said that the most important organ for the stock market and indeed life is actually not the brain, it's the stomach. Basically, your portfolio is bound to go down during a recession and you need to have the stomach for it. Correlation is the concept wherein the market goes down, your portfolio also goes down. Suppose the market goes down by 25%, your portfolio could even go down by 50% depending on the stocks you've invested in and the amount of money you've allocated to each stock. The third thing that you should do before a recession is basically invest in yourself. Now, Warren Buffett, the Oracle of Omaha, has previously said that the best investment that you can make is your investment in yourself. Imagine you have 1 crore in the bank. That's pretty good. But then imagine someone is trying to steal 6.77 lakhs out of that bank account. That is inflation. If you invest in yourself, good news, it can't be taxed and it cannot be inflated away from you. In the second part of this video, let's talk about the stocks that you should avoid before a recession. Basically, you should avoid discretionary stocks. Now, as consumers, you have things that you need and things that you would like to have, things that you want. You should avoid the stocks that play in the nice to have category. For this example, I'm going to use Delta Corp. You're probably familiar with this stock. They are a gaming company and a gambling company in India. Think gambling in Goa. And basically, their second quarter 2023 is actually pretty good. Their EPS or earnings per share went up to about 2.5 rupees as compared to a loss of 0.8 rupees in the previous quarter comparable. But if you consider their ROE, that's return on equity, at 7.6%, and also factor in that their earnings went down by 21% over the last 5 years, I don't think this company is well positioned for a recession. The second class of stock that you should basically avoid during a recession are high debt companies. Companies that have too much debt or the inability to service that debt. Now, the example that we're going to use is Dixon Technologies. Don't sharpen your knives. I know a lot of you are fond of this company, but Dixon Technologies in their most recent quarter, that second quarter of FY 2023, had basically their EPS go up to 13 rupees from 10 rupees in the same quarter quarter comparable. But if you consider the fact that in the last 3 years they've had negative cash flow, I'm not so sure this company is well positioned for an interest rate hike and recession. The third class of companies that you should avoid during a recession are growth stocks. Now, Paytm is a great example. I cannot say even one good thing about this company. Basically, in their last quarter, that second quarter of FY 2023, their loss per share, this is not a profitable company, went up to 9 rupees from 8 rupees in the same quarter comparable. And also their stock price, which basically listed at a discount last year at 1,955 rupees a share, is currently trading 66% down at about 460 rupees. And I think it's going to go down further. I could make an entire separate video about how bad I think this company is, but the bottom line is you should avoid growth stocks. In the third and final part of this video, let's talk about the stocks that you should invest in before or during a recession. Class number 1, utilities. Now the example I'm going to be using here is GAIL or Gas Authority of India. I do own shares in this company and it's a great company in my opinion. If you look at their most recent quarter, because of the Gazprom issue, their EPS is down to rupees 2 from rupees 4.3 in the same quarter comparable. But I think this company is going to do just fine in a recession, especially if you consider the fact that this company controls 70% of India's gas pipelines. The second class of company that you should invest in before or during a recession is a company with great management. And the example I'm going to use is Tata Consultancy Services or TCS. They are India's largest IT outsourcing firm and they have a great management team. If you take a look at their recent quarter, their EPS or earnings per share went up to 28 rupees from 26 rupees in the same quarter comparable. And their management in the form of CEO Rajesh Gopinath is actually really good for the company. He joined them in 2013 and since then the company has gone from strength to strength to become India's largest IT outsourcing company. The final class of companies that I think you should invest in before or during a recession are dividend stocks. Now I've spoken about this example numerous times, but REC is a great dividend stock. If you look at their most recent quarter, their EPS went up to 10.3 from 10.2 in the same quarter comparable. And also if you add in the fact that they have a dividend yield of almost 12% depending on when you buy the stock, I think this is a great stock for people who are interested in fixed income. Now at the end of the day, you have to deal with the fact that the recession is going to hurt you. Once you've got your mind around that fact, the only thing that you should concentrate upon is surviving. Thank you so much for watching this video. If you enjoyed it, please go over to YouTube, subscribe to the Blog of Note channel, ring that notification bell so that you never miss a video, and I will see you guys in the next video. Remember, you're a survivor.
I'm a survivor.